As far as batteries go, lithium will be the key element for a long time to come.
The level of misunderstanding and lack of knowledge of this industry, from mining to processing to refining to making the end products, is staggering.
The historic money that used to be around this industry is gone.
Clearly we don't have enough to meet the zero carbon goals of 2050, 9,000 years of our existing lithium production.
We as an industry need to step up.
This concept of, I'll just buy lithium when I need it. Well, not if the mines aren't there to build it.
Each of the projects that this team's been involved in have been led to mining decisions. And that's what we anticipate doing with Champion.
They found a nice double fist-sized piece of spodumene, lithium-bearing mineral right there in that sample pit.
There is lithium on the project. Now, let's find the source and let's figure out if it's big, small, medium.
Hi, and welcome to the Champion Electric Roundtable. I'm your host, Barrington Miller. Today I'm joined by Jonathan Buick, Paul Fornazzari, Patrick Highsmith.
Perfect.
Welcome to the show, gentlemen. For more information on Champion Electric, check out www.champem.com. So in today's interview, I'm going to start with the person that I've had the most experience with and who I know the most, and that's Jonathan Buick. Jonathan, tell us a little bit about yourself, about the company, your role, and how you got here.
Nice to see you again, Barrington. Need to get you another Champion hat. I know the last time we did this, we both were wearing Champion hats. We dressed up a little bit more for this format. So
yeah, exactly.
Sure. So I'm President CEO, founder of the company. I have been working in the capital markets my whole career. Prior to forming Champion Electric, was involved and had my own EMD slash advisor called Harp Capital. That's still around. My partner's running that. And within Harp Capital, we've been successful in raising almost $700 million for junior resource. And within that, about $250 million out of Korea with the big conglomerates. So we know who the end users are in the industry. We knew who the key players are in the battery metal space, and believe that in our future, they can be a part of that.
Well, that's, you know what, you've been a class act for so long, and I'm just glad that we've had the opportunity to, again, have a conversation, and we're joined by two others. Tell us a little bit about yourself.
Well, Barrington, I'm Patrick Highsmith, and I'm 35 years in this mining industry. I'm a geological engineer and geochemist by training, but I crossed over to the dark side probably about halfway through my career. After starting off with companies like Rio Tinto in operations and BHP in exploration, I managed business development for Newmont Mining for a while, and in that capacity I was doing deals with juniors and tracking a lot of projects around the world in the gold sector. And then I realized that sort of entrepreneurial spirit was flaring up, and I'd learned the capital markets in that role. So I came out and started working in the junior sector around 2009 or so. And one of the first deals I did was Lithium One, an early lithium company back in 2009, and I was the first CEO of that company. And that's when I met this character. We engaged Harp Capital to help us look at offtake of lithium and joint ventures for really our two big lithium discoveries we made at Lithium One, the Sal de Vida lithium brine project in Argentina and the James Bay lithium pegmatite project in Quebec. So, you know, as life imitates art, we sold that company. It was a great run. We were very early to the lithium space. I mean, the lithium prices we had then were fractions of what they are now, and we were happy about it.
Yep.
And so I moved on, other junior companies, as you do, a lot of gold, copper. I'm kind of known as a gold, copper, and lithium guy. And Jonathan and I reconnected, I guess, 4 years ago or so. And we had projects in the U.S., and I happened to reside in the U.S., so I joined the board of Champion at that time, and sort of predecessor name, but same company. And so today I run a couple of junior gold companies, and I work with this great team at Champion on the lithium business.
Well, thank you for that. And last but not least.
Yeah, good to meet you, Barrington. I'm a practicing lawyer, but I haven't left the business. I still have legal practice, but I got into the lithium space pretty early too. I'm from Chile, so I have a lot of connections in Latin America. And when this whole craze started, I helped now a very well-known lithium group find what is now the asset that's created Lithium Americas. So I was the founding chairman of Lithium Americas, which has split now into two companies, but was about $4 billion of value created there. And that same team, we left in about 2013 and started a company called Neolithium. And we started that in 2015, and in 2021, 2022, about 2 years ago, we sold it to the Chinese for $1 billion. So we've been in lithium business very early on. We're really with Lithium X, the first few lithium companies to list on the TSX, and just really been around the industry, know most of the end users, have watched how China has very openly taken over the industry, while we in North America have just kind of benefited, a few of us, but not as a country or as a region. We have not done anything about the buildup that's been happening in Asia. So that's my background, and in terms of the future, I think Argentina is now super overpriced, super explored, and I think the real opportunities for early stage guys like us is in Quebec, absolutely. That is where the great projects are being found, and it's such a prolific area that I think that's where the great companies are going to arise.
No, I couldn't agree with you more. I actually had the opportunity to go to a Quebec mining show last year, so it would have been June 2023, and the amount of projects and the amount of energy and buzz with that province for exploration was incredible. But the three of you, what was that aha moment where you knew that you had to work together, that you had something special here, and or could have built something special? Was there a defining moment?
I think maybe I'll take the lead on that.
Sure.
And I think I'd be remiss if we didn't mention Gabriel Pindar, our fourth director, who's not here. We're all in the same postal code this week, so it's allowing us to provide this format. We do anticipate in the months ahead to be able to do a bigger roundtable that would include all four of us, but certainly Gabriel's background, he's an engineer by training. He's been involved in building 11 mines around the world, including in Quebec when he was with ArcelorMittal. And so he brings an additional skill set in addition to the technical side of Patrick. He brings the engineering and build out side, and has been very successful and is a key voice for me. My goal as CEO is to always be the dumbest person in the room, and as you can see today, I've been successful in who I've picked as my board. But certainly Gabriel is a key piece that will be in our future podcast, but isn't here today. But certainly, I just wanted to mention that before we turn.
Yeah, no problem.
And he was with me one of the founders of Neolithium.
Correct.
So he's Argentinian. He's very engaged in the lithium world.
So did two of you have to try and convince him, or did you recruit them? Like,
I was the convincer.
oh, you were.
I was the convincer. So Paul and I first met back in the mid 2000s. He was at that time was with Gallings before he moved across to Faskins, and I was every PDAC I would host a Cree day off-site where we had all of our issuer clients, because we as HARP we worked on behalf of the issuer. We would have all the HARP clients, and we'd have all the Korean conglomerates in one room, and we'd do speed dating that day.
Okay.
And Gowlings ended up coming in and being a corporate sponsor to that event, because obviously there's business that can be generated out of that. And so we established a relationship, and then as I was creating Champion, at that time Idaho Champion, I asked Paul if he would join as a director. With Patrick, we met in 2009 when he was Lithium 1, and he engaged HARP, and as he said, we were successful. We brought in LG, GS Caltex, and Cress into the Sal de Vida. And I think it would be also important to highlight that each of the projects that this team's been involved in have been led to mining decisions, and that's what we anticipate doing with Champion. Sal de Vida has been a mining decision, is in construction. The James Bay has just delivered their technical report, and it's now, I think, 122 million tons. It's a top 5 North American asset, if not top 20 globally. With both Lithium Americas and Neo's in construction, Lithium Americas in production. This is the team that we've put together, and that's what we're going to do with Champion. And that's, I think, the aha moment I'll let them speak to, but certainly I was pitching them to join because I saw the skill set and the capability of them, and I also want to work with good people. Life's too short to work with people you don't enjoy being around.
Nope, couldn't agree more. Couldn't agree more.
Yeah, the capital markets piece for me was the linchpin. Having worked with Jonathan before, making trips to Korea with BJ as partner and Jonathan, and getting a deal done there, and Jonathan's appreciation for the market, not just the stock market, but the market for the commodity, and thinking ahead down the track. Long-term thinking is pretty rare in this business, And I've always found Jonathan came at problems with that point of view. So here I was, technical guy. I like to be on the technical side of things, but you look around and as Jonathan says, life's too short. You know, teams you can't trust, bad teams. There's a lot of players in this space who are here for the lifestyle or a promote. But here we're always looking for real assets. And while we have these gold assets and cobalt assets in Idaho, which, you know, the market may not fully appreciate, you know, they're quality projects. We built land positions. Jonathan persists through the cycle, which is key. And frankly, sitting on the board initially with Paul, and Paul and I had met in the earlier days of the lithium space, so I knew Paul, you know, more by reputation. And yet, you know, you get together on a board, and I would say specifically in difficult markets, and that's when you get to know the teammates and you put your heads together to solve that problem, because you're not winning for the shareholders by just going, oh, it's a bad cycle, so, you know, we'll just stop doing work, or it's a good cycle, we'll just sell out and walk away. It's through the cycle. And this team being able to consult with an experienced mining lawyer, you know, in the closed doors of a board where you can really address these issues, I think that's the key to success. And I think the evidence there is, you know, we pivoted this company because we saw the opportunity, and Jonathan immediately brought deal flow in, you know, one of the hottest lithium spaces in the world in Quebec. Bam, 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 we acquired property, and lo and behold, we've got this huge block of ground, you know, in the heart of the best and fastest growing lithium district probably in the world.
You know what? We're talking about lithium, but you guys are actually speaking about gold. Because as an investor or somebody looking at a company, choosing to follow, choosing to invest, or choosing to recommend, the advice I've always been given, and I've been in the capital markets now for a few decades, was examine the management team. That's the first thing. Not the project, not the location. Examine the management team. So these are the things that people want to hear and need to hear about without even realizing, especially if you're a first-time investor and if you're a first-time, you know, interest in the space. This is the type of information. It's not the good times and the easy times. That's fine. We all know what to do. It's during the times that are difficult, and we're going to get to that because there's been some more difficult times. Brief background on lithium, because again, we have a lot of people that may not even know what lithium is or why it's important. Why are we talking about it? Why are we here? Why is it all over the news? You hear the term rare minerals, critical minerals, rare earths, all of those things. Can we just break it down for some people that might be a first-time listener or viewer?
As a geochemist and lover of the periodic table of elements, can I start? Lithium is not a rare earth element in any way, shape, or form, okay? It's critical, but that's an arbitrary definition, critical. It's not a real thing in the way we look at what commodities are. But of course it's critical to, you know, an electric future. But what it is, you know, the lightest of all metals, okay? And very, you know, in the 90s, someone smart realized that lithium would make a better battery because it's, being the lightest of all metals, it'll exchange electrons very easily, but because it's light, your batteries will be more portable. And that was the beginning of the thinking about lithium batteries. It goes back to the 90s. Beyond that, it's got about the same crustal abundance as copper, so it's not particularly rare. Okay, a lot of rocks have a little bit of lithium in them. And so, but perhaps the most interesting part for me and for Paul, as he said, we were both in the lithium business back in sort of 2009, and you talk about ignorance. We literally people would say, you have to mine lithium? They didn't even know it was mined. And so really, it came to market through chemical companies, not mining companies. So the first of these industry lithium conferences, I'll sort of never forget the disdain that the large producers had for us junior entrepreneurs. They thought we were clowns, and they all said, well, we'll just turn a few dials at our existing lithium mines and we'll flood the market, the price will collapse, and you guys will be out of business. You're just sleazy promoters anyway. But in actual fact, they did no exploration. They would have had no idea how to do exploration. They were chemical companies in an industry that grew at the rate of GDP for decades because it was a boring industrial mineral. All of a sudden, the system breaks. Just-in-time manufacturing breaks when you don't have the lithium you need to make batteries. And of course, as Paul was saying, the Asian countries have always had a longer view. The Japanese have very little resources. They always think ahead. The Koreans similarly. China even, certain commodities, yes, it has plenty of, others not so much. And so they really did change the game, and we owe them a bit for that. And we entrepreneurs responded in the West, but our countries and governments did not. So now you have a commodity that was really mined first large scale in the U.S. Then we forgot about it. Those mines shut, things went away, the industry effectively went away, and now we're scrambling because lithium is the lightest of all metals. As far as battery technologies go, we have multiple generations to come of lithium batteries, which will probably ensure that as far as batteries go, lithium will be the key element for a long time to come. And for that, we're going to need Dr. Simon Marchot at GTK estimates 9,000 years of lithium production to meet the zero carbon goals of 2050, 9,000 years of our existing lithium production. So clearly we don't have enough. And that creates kind of a crimp in the supply chain and some excitement that we intend to move on and make discoveries and our industry will respond to. But we've had to drag them there because there's ignorance. There's this concept of, I'll just buy lithium when I need it. Well, not if the mines aren't there to build it. So it's as far as how it occurs naturally, it's usually in a mineral called spodumene when it's forming in hard rocks. Which is a mineral with aluminum and silica. It forms in granite-like rocks. Those rocks sort of differentiate when the melt is cooling and you get nice big coarse crystals. We call that a pegmatite. It's just a fancy word for coarse crystalline rock, basically. And these sort of lightweight elements will concentrate in these sort of segmented parts of granites. And they can be mined open pit and processed, and the lithium can be extracted from that mineral with a relatively innocuous chemical process. However, the cool part, and what people may have heard about, is when you weather lithium-bearing rocks and lithium goes into solution, and it's very soluble, it will flow downhill into lakes and groundwater, and in super arid climates like in Chile and Argentina, the water will evaporate away, leaving lithium in very, very salty water or brine. So almost half and half the world's lithium comes from this hard rock mining of pegmatite or the evaporation concentration of these brines. And that's just a matter of evaporating away the rest of the water and harvesting the salts. Among them are lithium, sometimes others, like potash.
Well, we might change the name of the show from the Champion Electric Roundtable to Mythbusters.
Yeah, there we go.
Featuring Champion Electric. But this actually dovetails nicely into what I want to talk about next, and that's the actual projects and the locations and the specificities of what you're doing, because we all know, or we should know, that Quebec is a lot different than Chile and Argentina. So I'm going to turn it over to you to tell us a little bit about the projects, the data, the location, and what's going on.
So our flagship project in Quebec, we have not given it a proper name yet. We're still calling it the Champion Electric Lithium Project. We're all of the opinion that you name a project on discovery, and we expect that to be in the coming months. To name it prior is not the right approach, we believe, and it's about checking boxes and doing the work. So our project is about 700 kilometers directly north of Montreal as the crow flies. We have 530 square kilometers right along the Trans-Taga Highway, and that is an important piece of infrastructure. For us, we've all got the scar tissue of investing in jurisdictions that you worry about a local strongman or a corrupt politician, or remote with lack of infrastructure where you're going to spend a fortune just getting to the project. So if the infrastructure wasn't there, we probably wouldn't be either. We've got the Trans-Taga Road. Adjacent to that is LG4 Airport, which is Hydro-Quebec's airport that services all their power dams. About 35 kilometers west of our property is Hydro-Quebec's largest power dam. We now have two power lines coming right through the property, and that's 3.6 cents a kilowatt of power, cheapest power in the world. And we do have the ability to tie into that on a mining decision. First discovery, doing the work to get to that mining decision, but we do have a lot of things that are going to lower the capex around the mine build that we anticipate. In our same structure and running parallel to us is Patriot Battery Metals, who's been a market darling last year, and they've just come out with their resource. They started in about February 2022 at about a $25 million market cap. Last year, mid-year, they hit a $2.3 billion market cap. Right now, they're about a $1.2 billion market cap. And that shows you the power of a drill bit and what that means for how the market responds. Yeah. And on our western flank is Winsome Resources, another Australian-listed company. And while we're going to speak to Quebec, it should also be known is that in the last 18 months, we've had 32 Australian-listed companies come into the James Bay. And as a Canadian, it's embarrassing that we've seen that many non-Canadian companies come in and take strategic ground. right out from under us. And so I think it's important for us as a Canadian entity to make sure that we advance things to our expectations.
Yep.
The Australians are great miners, are great explorers, but this is still, to me, it's sovereign ground that we need to be protecting.
This is your backyard.
We need more of our Canadian counterparts to step in and be forward thinking in terms of how we solve the metals dilemma as we go to an electric grid system.
Sounds like we need another roundtable.
It needs to be a long oval table.
No, exactly.
Did I miss anything on the project?
Yeah, I mean, as you touched on, it's an elephant country. There are already proven pegmatite discoveries in that part of the world, and it has the key geological ingredients. You're in these ancient rocks in the craton of one of these continents, the roots of one of the continents, and there you get greenstone belts, and you differentiate volcanic rocks and granitic rocks. And when that happens, you form pegmatites. And we're looking for big structures, which are basically dilatancies in the earth where these granites can come up and these pegmatites can separate out. And we know they exist in that area. So, it's the way a rush sort of goes in this business, isn't it? There's a discovery. There's a lot of excitement generated from that discovery. And then a lot of other peers and competitors move in, and that's how discoveries happen and how these projects advance. And as Jonathan said, infrastructure is key. You got to have the geology, you got to have the infrastructure, and then best of all, you're in a jurisdiction with expertise as well, permitting expertise, operating expertise, a labor force, and that's Quebec in a nutshell. So we've got the key ingredients, technically, infrastructure, government and policy-wise, for sure. So it's a great place to be. And
yeah, absolutely. I would add that the exciting part now, and now the market and the price of lithium are in the toilet, people are running for the doors, which is fine. I've seen this up and down cycle like 3 or 4 times now in the lithium space, and until lithium becomes a real industry, and it's not real in my mind when spot prices can go from almost $100,000 a ton of lithium carbonate equivalent to down to almost 10,000 today or 12. Like that just tells you that it's still a very young industry, and we're going to see this terrible trend, but it's always trending up in my view. I mean, when we were starting, lithium was $2,000 a ton. It got to 5,000 bucks a ton, and then the majors gave all their clients a 10% discount. The price dropped by 10%, and we lost the ability to finance junior projects. Like just that little manipulation can really hurt this market. But beyond kind of the macro issues that we should talk about, this project I think is super exciting now because we have discovered spodumene boulders and hundreds of shavings off a big could be a big pegmatite, could be a small pegmatite, but it has come off something, right? There is a source, we believe, on the project, and that's the exciting part. And I don't think the market realizes that we took a greenfield opportunity. Yes, it has amazing neighbors, and they're very valuable, and they found something very valuable, but it was virgin territory when we got it. But today, we have found lithium on the project, tons of shavings that have come off, hopefully a very large elephant. That's what we're trying to find out. And this is only in a very small part of the project. So now it's no longer a greenfield, I think. It's now, there is lithium on the project. Now, let's find the source, and let's figure out if it's big, small, medium. I think we've come a long way, frankly.
Well, Barrington, this is historical. The lawyer has beat the geologist to talk about our rocks. Right? So, yeah, that's a real lawyer for you. So to his point, and just to clarify for folks, we are doing greenfields exploration. I mean, no pegmatites were known in this part of Quebec. And in fact, when we discovered James Bay in 2009, it's pretty far north, we thought, and we're right on the highway that Hydro-Quebec had built. So, in fact, there's a rest area on top of the James Bay pegmatite that we discovered, and there's a big white cliff sticking up out of the swamp. The white is the pegmatite and the spodumene, the lithium-bearing rock. So it wasn't that hard of a discovery, just to be clear. Full credit to my geologist, James McCann, brilliant pegmatite geologist who did that work back in 2009, 10, 11. But here, further north, not only have we found bigger pegmatites further north, Corvette is bigger than James Bay was, but some of these things are going to be obscured. This area of the world's been glaciated. The glaciers were, 14,000 years ago, we had a mile of ice over our heads right now in Toronto. And so that sediment has been dumped on top of the rocks. Sometimes you're lucky and the erosion exposes a pegmatite, other times not. And much of the Winsome discovery is covered. The Corvette discovery, one of them's under a lake. So here the fact is we've got sediments over 75% of our property, Barrington. So the pegmatite's not just sticking out of the ground, but we did systematic exploration. And part of that, we were sampling these glacial sediments, and the guys got out there in the field, getting their hands dirty, digging into a pit to take a sample, and they found a nice double fist-sized piece of spodumene, lithium-bearing mineral right there in that sample pit. And when they processed that sample, they saw lots of little microscopic and submicroscopic chips of that mineral. And the key is, where did it come from? And we know which way the ice moved. And guess what is up ice from our sample site? All our property for kilometers and kilometers. So there's a high probability, as Paul said, we'll find a source for that. And, one season of exploration in an area that had never been explored for lithium before, not too bad if I do say so myself. Notwithstanding that the market doesn't have much patience these days.
No.
But that's okay. We're doing the work, and I would say very cost effectively as well. And we'll be able to drill soon. And we're in Quebec, where permits come expeditiously, and you can execute winter or summer.
Well, one of the things you mentioned, and I got to stop pointing because I get it. That's my New Year's resolution. You just get all worked up and excited. You were talking about the macro issues and some of the, I guess, the positives, the negatives. There seems to be more negatives around. Let's go into that a little bit more. And I'm thinking like weather conditions. Quebec is cold. When somebody says Quebec or north, I just think cold. And if you're able to continue the work, but of course there's also the market. There's the capital markets, there's the spot markets. Let's talk a little bit about those macro concerns.
It's easier and cheaper to work in Quebec in the winter than it is in the summer because everything's frozen. So you can move your drill rigs around, your crew around, where if you're not in winter conditions where everything's frozen, you're having to deal with swamps and bogs, and the ability to move and manage your exploration program becomes much more expensive and longer. I think the opportunity in Quebec is unique because what we've seen in the last 6 months in Australia, because Australia is probably a decade ahead of Canada in terms of the understanding, the expertise, but also the capital markets willingness, is you've seen Gina Reinhardt and MinRes turn the WA into their own personal sandbox. Mm-hmm. They've now blocked foreign participation unless it's on their terms, which means that the big chemical companies are going to have to come to James Bay. It's the only other place that has elephant country. So them blocking the takeover of Liontown, putting up a roadblock on the Azure takeout, and then coming back and having SQM come in as a partner later, has told the chemical companies that this is not going to be an easy place to work and operate.
Right.
Those chemical companies, to actually satisfy the ambitions of all the different protocols, need to be in the James Bay. The infrastructure will get built. Those mines will be built. And there's an opportunity. These are early innings. This is a 100-year cycle. This is not a 6-month cycle. We're in a 6-month, 12-month pricing situation. And the sine curve of every industry goes up and down. Right now it's a lull. But the real, you can't have made the switch to the EV market and make commitments that you've made and the alterations to your factories, and then just turn it off and go back to, we're just going to do internal combustion engines. There's always going to be a role for internal combustion engines, but that doesn't alleviate the need for the electrification of a lot of our fleets, whether it's big trucks or cars. The shift is happening. I've got teenage boys. You've got 20-something kids. You've got 20-something kids. My kids are not interested in an F-150. They're interested in driving a Tesla.
Yeah.
And they see it and they talk about it and they give me a hard time every time at the dinner table. They're putting demands and challenges to me that I understand their voice. I don't always agree with it, but I understand their voice. I'm now a gray hair. That seemed like not that long ago I was the young one at the table. Now I'm not. But maybe I can have you guys jump in.
The price cycle is key, and I think again, I'm no investor. I've never called a gold price in my life properly, and I've never called a lithium price. Maybe we picked the lithium price a little bit back in the day, but the point is, this market is so tiny compared to, say, I did a presentation to the oil industry 3 years ago, and I was asked to speak about should the energy producers be looking to the critical metals, and I spoke to a technical group in the oil industry, and I showed a bubble plot of the scale of the oil sector globally, which at the time was 2.3 trillion a year turnover. As you probably know, iron ore kind of comes in second at, is around 300 billion. Copper's somewhere around 220 billion. Gold was 280 billion or something like that. Lithium was 2 billion. So if we look at bubble plots, the proportion of these sectors, oil is a mature industry that turns over trillions of dollars a year, and lithium is single-digit billions. And you can see why BHP and Rio Tinto took forever to even mention this commodity in their annual reports, okay? So the price today does not reflect the major funds in New York buying the equities or buying the metal, because it's not exchanged on it's not traded on an exchange. So there's no transparency to much of the pricing. These are still private contracts. Okay, we got lots of services that can give us a price. We know roughly what it's selling for, but this is no normal metal yet. And we have to think longer term. Our industry tends to operate on quarterly guidance for the producers, and juniors, we just ride along whatever the wave is that we're surfing. It's a good wave or a bad wave. But the big producers are running their companies on a quarterly basis, and this price cycle is on some version of a decade basis to sort of normalize. Billions of dollars still have to be invested to mature the lithium supply chain, and it will come. It absolutely will come. And we are still in the comparatively early days, and we have to persist, and we got to go find more lithium.
I was talking with a few people over the past few months, and we were just talking about the U.S. market and how it's non-existent from what it used to be as far as mining and mineral exploration. And Canada has a great opportunity to strengthen and to do what Australia, maybe not to the same level or the same degree, but Australia's protecting their own. And I think Canada needs to and can do that a lot more while still supporting the market, as well as companies such as Champion Electric. So while we've been exploring some of those, the macro factors and conditions, there's got to be some other ones. And can you speak to it if there are?
This is kind of the things that bugs me about what's happening in North America and Canada specifically, because we've seen the lithium industry develop. Like Patrick said, it was a very kind of boring industrial mineral. No one cared about it. It was started in the U.S. The technology, all of the technology around lithium was developed in the U.S. For nuclear applications, for a few of the additives that go into making Corning ware. So Asia, it was actually driven by Japan, Korea, and the Asians came in, China came in a bit later, but Japan particularly was interested in lithium for lithium-ion batteries, primarily for the cell phone. They saw that the cell phone was going to become huge. Korea saw it as well. They realized that they need lithium for those lithium-ion batteries for the cell phone. The EVs weren't even on the radar at the time. And in North America, we saw that happening, and China saw the vision, I think, clearer than anybody, and they're like, well, we're going to become experts in refining lithium and all of the applications, so lithium carbon, lithium hydroxide, into making batteries. We're going to develop the know-how to make batteries and become leaders in it. And we watch this. Like, this was not a secret lab agenda in China that, it's been 20 years of us watching on the sidelines. Australia's figured it out because they're the main suppliers of lithium to China. And all of a sudden, 20 plus years later, our politicians are like, this is a critical mineral, and we can't let China dominate the lithium processing and battery production, and China controls 80% of it. And yet, we did nothing for 20 years, and I really think we still don't get it here. And the policies that I'm seeing out of the US, and particularly Canada, are so naive, frankly, that it's laughable. Like, they're blocking China investment into little juniors, which is having no effect other than the people that were involved in the lithium business and finding the great projects overseas have left Canada, are leaving Canada. So we're actually isolating Canada from the lithium business more by the decisions of this current government. I heard all kinds of discussions around the neolithium, parliamentary hearings when neolithium was being talked about, and the level of misunderstanding and lack of knowledge of this industry, from mining to processing to refining to making the end products, is staggering. Like, no one knows anything here in Canada, and yet we're all seeing that this is a problem. So there's a lack of education, a lack of planning, and a lack of vision here in Canada, and this is why the Australians now basically own Quebec from a mining perspective. All the major new companies, Livent, who's now changed their name for third or fourth time, none of them are in Canada, right?
That's a good point.
And we had a head start with finding the brines in Argentina. Now Quebec gives us an opportunity with the great hard rocks, and again, we've missed the boat.
You know, I would argue the mining industry is amongst the most global of businesses. And this goes way back, you know, the anacondas of yesteryear. And look at our board, our little tiny company. We have an Argentine, a Chilean, a Canadian, and American. And for all Paul's complaining about the knowledge of the Canada, both the government and the people of Canada, I assure you the U.S. is light years behind Canada. We don't even know there is a mining industry for the most part in the United States. And it's a really key point, because consider how much lithium was used in cell phones, grams, versus your average EV, kilos. And that was a real game changer. I was running Pure Energy Minerals at the time when the Gigafactory was breaking ground in Nevada, and we had a non-binding offtake with Tesla. And there was just sort of criticism of Elon. Oh, it's crazy. It'll never get built. It'll never happen. Is this Gigafactory 3 or 4 he's on now, right?
Yeah,
so,
exactly.
and he's deployed more gigawatt hours of electric on the road than all the rest of the companies combined. And we made fun of it. You know, we made fun of it. So.
What's the first thing or the one thing that you would do to change the direction of policy, to change the direction of the industry, the market, the government's view on the industry? If there's one or two things that you would suggest.
I've got one. Just a minor little thing of the number of tax dollars generated in the U.S. How about we issue flow-through shares in the U.S. to make investment in exploration tax deductible? So those of you in Washington and voters, consider the benefit of a flow-through share in the United States of America, because we see what it's done for Canada.
Yeah.
Amazing.
You have to try to make changes and reduce it.
We're doing the opposite, though. We're shutting
you
down.
don't even have it.
Yeah.
At least we have it to take it and prune.
Yeah, you have it. You can prune it here, but we don't even have it.
I think the other part that's not often talked about is that we don't have the upgrading facilities in the West. We're still reliant on China. And who knows what types of subsidies are being given by their government to allow them to work in a weak pricing market.
Right.
We're going to see a couple of mines closed in the current price environment. But that's going to be, a short-term situation. But we're seeing taxpayer dollars come in, and we're going to pay for the benefit of a Volkswagen battery plant in Ontario or in Quebec. Like, how we're deploying tax dollars, we're the ones that are going to write the check, and our kids are going to be the ones that write the check. We still need corporations to write the check.
Right.
We still need them to, if they're going to really make the pivot, it shouldn't always be about, what type of benefit, discount, and tax regime are they going to get to keep the surplus. We see businesses that are in trouble, they get bailouts. When they're making money, they keep it. That's the same in this industry right now, in terms of how and they're actually going about it backwards. They're building the battery plants without even knowing where they're going to source the metals. We need more mines to get built, not just the battery plants. Mm-hmm. It starts with breaking ground.
So we can look at China, who did this totally openly. The government financed the refinery industry. So a lot of these huge companies now were just startup refinery businesses. And they gave them zero interest loans to get these refineries going, because they knew that the refinery business is key. And there's a lot of technology that comes out of refining, and they can control the market. And then those refinery companies went upstream and have now bought all of the assets in Argentina and around the world, in Africa. Like, I know right now, China, there's at least 6 companies buying everything under the sun in Argentina. And those owners of those mines in Argentina that used to come to Canada to finance the exploration, to get them certain stage, to then to sell to the Chinese, have said, we're not kind of Canada. Canada has basically said, you're not allowed to play in our playground anymore. You're not allowed to raise money in Canada because if a Chinese buyer buys you, we're going to block that deal. So the policies that are just very misguided. So I think one thing we should do is look at the whole supply chain, and to Jonathan's point, we need mines, but we also need refineries here in Canada. Otherwise, everything's going to China.
100%.
And we need, like Australia's doing, give our national companies the ability to explore and develop our national resources. The pension funds need to get behind the junior mining space. In Australia, they're very nationalistic. The pension funds they understand mining way better than the ones here. They're all kind of pulling the rope the same way in Australia because they are 10 years ahead and they kind of see it. We talk about critical minerals and the government puts critical minerals on a list, but okay, fine. What does that mean? It means nothing. You actually have to have a plan behind that. Mine it, refine it, sell it, create the whole supply chain here.
We need our own ecosystem.
Yeah.
No, I couldn't agree more. And without mining and mineral exploration, there is no capital markets in this country, period.
That's another problem we could talk about.
So a recent stat I heard this week is that we have 1,500 junior resource companies in Canada listed. 50% of those now have a market cap under 10 million.
Yep.
75% of them now have a market cap under 30 million. The dilution that's going to happen in order to continue to advance these assets are going to make these companies unfundable. I mean, I used to think we needed to have M&A to clean up a lot of the lifestyle companies that are out there. I don't think we need M&A because you're wasting money on lawyers and auditors and technical people to complete the transaction. I think we need to just see a bunch of them just go away. And then we actually have a better source of projects to actually seek capital. There's the pool of capital available for industry right now is a turtle pool. There's no diving. It's a kid's pool. The historic money that used to be around this industry is gone. So where are we going to find
In
it?
Canada, but it's in Australia.
And that's why we want to talk about even the pursuit of an Australian listing.
Yep.
Right? There's $1 trillion of superannuation fund that understand the junior resource market, but they can only buy AS-listed companies. We need to be there. We need to be able to access capital with an investor base that actually understands the critical metals. Sorry, the use of critical metals here. But that understands lithium, that understands cobalt, that understands iron ore, that understands nickel. The Canadian investor typically will buy precious metals and maybe a little bit of copper. They don't even buy bulks anymore. So where's that next tranche of funding that's going to come to actually build these mines? It's going to come from our Western allies because China's no longer able to participate. We don't have the big Canadian mining houses anymore. They've all been gobbled up. So we have to figure out how we're going to fund these because they're not small checks.
Well, I know the ASX, and I'm sure you know that as well, the Australian Stock Exchange, took the measure of raising the minimum market capitalization that a company is required to be listed. And inadvertently, they are culling the companies. That's exactly to your point. They already took that step. If you are below this, you are not listed.
Yep.
And where do those companies go? Just fizzle out, go private, and just get acquired by somebody bigger. So that's exactly what they did. And again, they're ahead of their time.
It would be fine, Barrington, if this was happening in favor of well-managed large companies that were investing up and down the pipeline. However, that's not what's happening. Just this week, Albemarle has announced significant cuts to their capital budget for next year and substantial layoffs and disinvesting in a various number of projects. So this is one of the largest lithium producers, and they're scaling back. Why? Because the price today is down. As Paul pointed out earlier, no one thought the near $100,000 a ton price was a real long-term price in lithium. It was a reflection of the short-term constraints of supply and demand and sort of an unusual, irregular market. This will repair itself over time as the business matures, but if the large companies can't think through the spectrum from exploration to reclamation and continue to do that as large producers, then the junior sector needs to flourish and blossom and not be constrained and cut off. And I believe that is what's going to happen ultimately. Canada has responded multiple times. You know, exchanges like the NEO, maybe some innovation at the TSX venture perhaps would help. But something's got to give because the majors are not filling the gap and they're not even continuing to invest. So my mind as an entrepreneur, I love it because there's a problem and buying low is part of the equation. That means assets will be available at a lower price, and that means we can put even stronger companies together with fuller pipelines.
And that's why doing roundtables like this is important, because you, as the listener, as the viewer, get to hear firsthand and learn not just about the company, about Champion Electric, but about the industry as a whole. I'm going to shift gears because that's what I can do as host. And one of the things we were talking about earlier was the factors that may affect Champion Electric's ability to do exploration, to do drilling. And last year we had, I think it was last year we had an unfortunate fires that occurred, which, tragically a lot of people lost their livelihood, lost lives, loved ones, communities were torn apart. And, Jonathan and the team at Champion Electric took the steps to just be human, and I kind of want to go into that, and I don't want to just wash over it. So I'm going to let Jonathan talk a little bit about what Champion Electric did and the relationships that they developed and had developed with the First Nations, but continue to keep with our Indigenous brothers and sisters. So.
Sure. So typical forest fire season in Quebec usually lose about 16,000 hectares. Last year they lost 3.79 hectares just in the James Bay, including across part of our property. It was a mass media conversation piece for probably a week and a half, and then New York got hit with some smoke. It became another piece in the U.S. We as a company lost 11 weeks in the field, which is difficult in your first inaugural field season, your maiden program, to lose those 11 weeks. But in speaking with the First Nations that were in their territory, I was speaking with the chief and the deputy chief regularly. How can we help? What's happening? And hearing about the evacuations that they had and the loss of livelihood. They lost their cabins, they lost their snow machines, they lost their canoes. Significant impact to the wildlife, the Ptolemy bird and the white bird that they hunt. Everything's ash, there's nowhere to eat, they've left the area. The ash and soot into the lakes that have impacted the fish. There was no proper hunt this year because the caribou had nothing to come down to eat off of. So those are real life situations. They didn't lose 11 weeks in the field program. They've lost a lot more than that. So we started talking internally, what can we do? What can we do? And so the first conversations I was having with the chief, she said, well, look, we're fighting by the minute here. This is a war zone. We're ravaged. I don't know how you can help. So I kept reaching out and realized that there was an opportunity for us to do something. So we started a GoFundMe page. We've started to raise some money. At Christmas time, they had a gift from the heart, where that's a program where they do a turkey drive and gifts for disadvantaged members of their community. So we made a donation to that. We had done that the year before. We're still new entrants into that territory. We've only been there 14 months. We did 9 acquisitions in the last year and a half, but we've really only started to know each other. But to me, ESG is that. It's not the big stuff that you hear about in these big funds. ESG is your neighbor is in trouble, you go help your neighbor or offer help. What can we do? And I think that's going to pay dividends for us down the road, because we're actually showing that we're actually being considerate and caring for their situation. The media stopped covering it, but that hasn't changed their situation, right? They still are dealing with the after effect of that, and it's going to take 5 to 7 years for regrowth, for that to actually be able, for the habitats to come back, for the various birds and species to come back, and that's all going to have a longer. Even the medicinal of the herbs and plants that they use, like, it's far-reaching and way greater than we ever appreciate. And every time I talk to them, I'm learning about the broader harm that's been caused, and we as an industry need to step up. The Canadian mining industry, I learned this at the Canadian Mining Hall of Fame last week, the dinner we were at, is the biggest employer in First Nations in Canada. I didn't know that, and I've been in this business my whole career. But as an industry, what are we doing right now for our neighbor?
Right.
And it wasn't just Quebec that was hit by fires. Northern Ontario was, BC was. It's a yearly thing, but the magnitude in Quebec last year was, they say 1 in 100 years, but there was one 50 years ago, so that I don't know how they can do 1 every 100 years when it's actually 50 years apart. But there will be more of these situations, and as an industry, we need to step up and play our part.
No, I couldn't agree more. And in the show notes, we'll make sure to put a link to the GoFundMe page so that, you know, just do something while you can. So I just wanted to make sure that that was brought up. We're going to talk a little bit now about Champion Electric's strategy and going forward, whether it's in the rest of 2024 or beyond. Yeah, I'm not sure who wants to take the lead. The strategies that, of course, that you can talk about, because you don't want to give all your secrets away. But
Well, I think good people can use mediocre assets as currency to find good assets. Mediocre people will ruin the best assets in the world. We think we've come in and we've got a world-class opportunity in Quebec. We now control 503 square kilometers in a greenstone that's delivered 2 world-class discoveries. We believe we're going to be the next one. We have funds in the bank. Our strategy is to continue to remove the risk. Our job, our responsibility to our shareholders, and we're shareholders, but our responsibility to our shareholders is removing risk. And right now, we did that program last summer and fall. We've got data back. We still have more data to come, but we're about to remobilize our crew back into the field. We're going to continue to de-risk the project. Once we have finished that next program, will be a drill program. The scarcity of capital means you need to continue to grow and advance, and we need to show the market we're worthy of that next tranche of funding. We're not seeking capital right now, but we will. This is a capital-intensive business. So our strategy is we've got the right assets, chasing the right metals in the right jurisdictions. I don't have to worry about a corrupt politician seizing my asset. I'm in Quebec and I'm in Idaho.
right.
I got 2 top 10 jurisdictions. Fraser Institute every year ranks them. Quebec's number 4, Idaho's number 9. You can't ask for better places to do business. I've got a board that's got pedigree, that's done transactions with the big companies, that have worked for the big companies, that they guide and steer me to things and conversations that we may not know exist. We constantly are reviewing and evaluating other assets. When's the right time?
That was going to be my next question.
Our company's too cheap to go out and transact, right?
Yeah.
We'd be diluting unnecessarily to do something unless it's a very strategic initiative. Bigger strategies, we still want to pursue an ASX listing. We think our future includes ASX. We've had lots of strategic conversations. And again, because of our current market cap, it doesn't make sense to transact at these prices. But that's still something that we think we need a big brother to step in beside us because of the capital-intensive nature of this business. And maybe you guys can jump in and add
I mean,
to
I've
that.
said this, but what I'm excited about is we found lithium on this project. It's there, found a massive boulder, it's beautiful, the crystals are exactly the right thing, and we think we know where it came from. So to me, mission critical is to go to that area where the boulder came from, find the source, and if it's as big as our neighbors, we're in a different, place immediately.
Yeah, the teams are back there in the next week, and that is number one an exploration company. Even though we've got a bit of cash in the till and we're stable and we've got this huge land package, people don't buy junior mining stocks because you've got a little bit of cash in the till. In fact, we are required to invest that money in exploration, and we're moving as fast as we can to drill targets on this huge property that we have in Quebec. And so in the middle of winter, the team goes back up, we'll do some geophysics. We don't even have all the results, Barrington, from all those samples of till we took over hundreds of square kilometers. Those are still being processed in the lab. So as those come, we'll be following up on those as well. And statistically, it's unlikely this will be the only bits of lithium we find. This was just the first sample. We came back, results came back early. We could see the big, macroscopic evidence of the lithium. So you got to get to drilling sort of as soon as you can, but you also have to keep sort of the pipeline, not just one drill target, but multiple drill targets, because we all know every drill hole does not hit ore in this business. And then, as Jonathan said, while we're managing that, advancing our existing projects, there's a lot of brainstorming and we see a lot of deal flow with this team. So we get the opportunity to think ahead. What comes next? Where do we add ground in Quebec, possibly? Or where do we, maybe things change with the cobalt market. We've got an incredible land position in the cobalt belt in Idaho, and maybe things improve there. We're long-term. We love that ground. We love that package, but we'll kind of a card up our sleeve for the right timing in the market. So I like to see multiple opportunities in a junior company, and first and foremost, though, is drilling, and that's what we're moving towards right now.
So I want to get to the market outlook and horizon, and you sort of touched on that. But I know that some of the audience, and I've gotten questions from people because I go around and I just talk. If you could somehow relate the movement in the price of lithium and how much it would need to go, say from 10,000 to 12,000 or 12 to 20, like what's that little bit, because I know it's not going to take a lot in order for things to start getting the ball rolling again. Is it a 20,000 point jump? Is it 5? Is it like, are we close, or is there still a ways? And just
I think a lot of that's psychology.
okay,
I think as a junior explorer, whether you're chasing a precious metals or an industrial metal or a bulk metal, we too often are tied to the metal price when we're still a 7 to 10 year, from a discovery to a permit to break ground is a 7 to 10 year cycle. If I'm a junior gold company, the fact that gold's through $2,000 now for what, 9 weeks, juniors, some of them have moved. But they're never going to benefit from the current gold price.
Right.
And so the lithium price, I think we just need a change in direction. We'll change the psychology. Right now, everything's getting thrown out with the bathwater.
Right.
And there's a lot of fast money guys that have come into some of the juniors, and some of them have left, and some of them are waiting. They'll come back for certain catalysts for each company, whether it's drill results to come or what the next activity that's going to generate what they think will be a meaningful audience. That doesn't change our business. We have a responsibility to move the project. Where I think the market goes in pricing, it doesn't have to go to 20,000. It just needs to stop coming down.
Right.
And then everybody's going to be able to catch your breath and say, okay, where's next? What's happening next? And I've heard forecasts where they say it's going to be a soft lithium price until the June, end of Q2. I've heard others where they said it's a year. That right now, that doesn't matter to us because we're not a producer. It does matter to us because we need to be able to source capital, but it's not. It shouldn't be as impactful to us as it is to a near-term producer or a current producer.
Yeah, that's a great point. I saw an analyst right at the peak when it was at whatever it was at $75,000 a ton, and an analyst said something like, "Don't envision your mines going into production and selling their lithium at $75,000 a ton. Take about 25% of that." So that's a very interesting way of looking at it. Maybe we're talking about $15,000 a ton or $20,000 a ton or something longer term. As Jonathan said, it's down the track a ways. But sentiment and an understanding of the market will benefit the investor. And again, we need some liquidity in these stocks. We're a well-traded stock, so there is the trade. There is the trade. I understand greed. Greed's good, as our friend said in Wall Street. And the trade is there. When the price is down, pick up some stocks and maybe trade some of those when the price goes up in lithium, because you'll see it in some of the stocks, well-traded stocks like ours. But at the same time, the longer-term play is, think about it this way. We need a price that supports the development of mines and processing plants. And I don't think that market has found it yet. And I think that it's probably not $75,000 a ton. It's much closer to that 25% number that analyst said.
This is purely a China play. They control 80% of the lithium production, right? So the lithium processing companies are probably more coordinated than any other industry, and they buy kind of together, and then they stop buying. And so they stockpile, and that's when you see the run-ups, and then they've got enough for whatever their projections are, and they actually stop buying lithium. So this is why the prices go up precipitously and they come down. And right now, bunch, I don't know, 2 or more mines in Australia have actually shut down. So there's going to be less production. That stockpile is running out. I've heard it's days. Who knows? And when China comes back...
You never know.
Yeah, you don't know.
Yeah.
This is why it's not a real industry. This is what I said at the beginning. This is not a real industry yet. But China is going to come back and start stockpiling again. And when that happens, they stockpile at these prices, which is great. But the prices then start creeping up because Australian mines come back online. So I think it's all a game, and I would do it if I'm controlling an industry. Anyone would be do this, let the prices tank, and then start buying at these low prices, stockpile. You'll end up buying, you're averaging down your costs, and then prices will spike again, and you stop buying, and then you let it happen again. And it means that the Chinese are really buying at the bottom almost every time. Stockpiling at the bottom, let it run up, crash, buy again.
For our audience, I just want to say thank you for joining us and joining the Champion Electric Roundtable. Thank you, Paul, Jonathan, Patrick, for your insights on the project strategies, telling us a little bit about lithium. Please make sure you check out the show notes for additional links, resources. Contact the company. I know they will answer. I know that because we do some of the back office for Champion Electric, but they do respond to emails. And if you have questions, feel free to contact us. I've been your host, Barrington, and I just want to say thank you for joining. And again, this has been a roundtable with Champion Electric.